Hello everybody, welcome back. I've missed a few days, I'm fully well aware of that. I've been a bit hectic at work, I've got various things on, so please do get yourself settled, grab a cup of coffee and let's get stuck into the video. But before we do that, please don't forget to smash the like button and let's crack on. Hello and welcome to another episode of Frugal Finance. So today we're going to have a quick look at the market from this week. Obviously we all know that it's been a bit of a turbulent ride. It's been like a roller coaster, but in theory, like a roller coaster, you only get hurt if you get off halfway round. So with that said, please do smash the like button down below. It's a little tiny button around about here somewhere, and a little picture of a thumb. Just click on it and then that lets YouTube know that you like the video, and then what that will do in turn is actually allow other users and other people who use YouTube to see this video and hopefully learn something from it. So please do smash the like button, don't forget to subscribe. Let's get started. So it's been a bit of a crazy week, and there are various reasons for that, and I'm sure there are lots of videos out there that you can have a quick scan for to show you exactly the reasons. But essentially what's happened is that you've got the fear in the USA market that interest rates are going to start to go up, and that is because we have this thing called treasury bonds and treasury yields and things like that in America that they issue, and they give back a secured amount of return. So effectively, it's like, say I loan you £10 and you're going to give me back, say 1% for that, and that's fine, and there's no problem at all. But traditionally, I could probably get more in the stock market. Well, the fear is that if I raise interest rates, then the stock market itself, it makes those companies slightly less profitable, because the cost of borrowing goes up, especially those ones that have got high borrowing. They can invest less money into their businesses, so people start to take that money and then maybe put it in more secure things. But obviously they're also looking and saying, well, I'm not going to lock it up on a 2% bond or something for a long period if interest is just about to go above 2%. So it's making people very nervous and unrested, especially big investors. So I'm sure there's lots of videos out there that do a much better job of explaining it to me. I think even Graham Stephan, who you've probably all heard of, did a video on it yesterday, a lot longer than this one, that gives you a much more in-depth knowledge of that. But essentially that's what it is. The investors are spooked, and unfortunately the retail investor, you and I essentially, do have a history of really jumping off the roller coaster halfway round. So that is obviously exacerbating the situation. So let's have a quick look at my stocks and shares portfolio of Trading 212. Before we click on that, obviously, as I always say, these videos are for entertainment purposes only. You do need to take your own advice when investing in the stock market. If you're unsure what you do, please do seek independent legal advice. But with that said, if you do want to invest in the stock market, please do use the code in the link below. If you're setting up an account with Trading 212, that will allow you to get one free stock valued up to £100. So it's £100 worth of free money. I literally don't understand why nobody would not use the link when setting up an account. Even if you only get a £15 share, it's still £15 for free. So let's jump on over. So just jumping over onto the Trading 212 app here, you see my portfolio. So basically this week we're down 2.91%, which is 76 quid. It's not faring too bad considering some of these stocks that I've got are down, quite considerable fair chunks. Most notable, I mean, Apple's actually recovered a little bit. It was hovering around about the 10% in the red. We've got to just under 7% now. And then another particular big notable faller was Churchill Capital. Even though I bought in around here at the dip, it's still actually gone slightly lower, so that's down 18%. CCIV ticker symbol, and then you'll see there's a whole load of ones that are over a 7%. Lowe's company here, and then Nvidia is 15%, PayPal 10%. These tech companies have been hit quite hard. Generally, that is because they have, generally speaking, quite a lot of debt, or they have a lot of cash, and maybe they're not reinvesting into the business. So rising interest rates are obviously going to affect any borrowing that you got, because that will cost you more. And then if you don't have more money, then you can't invest in the business. So that's obviously been one of the key factors here. But you've got Roper Technologies here, Square's down 15% pretty much, Tesla's down 30%. I mean, that is crazy. I mean, I didn't think I would ever see it below £700, and we're now seeing it below £600. So it's pretty big in its history, if you like, in terms of this dip. But I think if you believe in it long term, then don't get off the roller coaster, as I said before. So there are obviously other stocks here that have not performed particularly well. Walmart, I'm not too sure why that's down, because it's not a tech stock, but potentially that's pandemic related. And then if we just have a quick look at the pies, interesting, that is actually up 1.3%. Now that, as I've described, is that this is a dividend focus pie of 50 dividend paying stocks to give you almost daily dividend. It doesn't quite work like that, but generally speaking. And whilst I do a midweek update, which I know I missed this week, so we'll have a slightly longer one next week. So sorry about that, I've been a bit flat out at work. But the important thing to note with the pie is that because it's so diverse and there are small amounts of money split across all of the holdings, you'll see there's an awful lot of red in it, but there's also an awful lot of green in it. So because it's so diverse, it's actually acting more like an ETF, like the S&P 500 in that sense. So this week it's actually up 1.39%, and if you look back through my videos to do with the midweek update on the pie, you'll see that quite often it's around zero, or maybe slightly in the red or slightly in the green. So it's nice to see that that's sort of stabilised it, really. Because obviously if that was in the red as well, this figure here would be higher. And then we'll just skip on over to Neo, which is in the invest part of the app. So that's down a whopping 25%, even though midweek I did actually buy a fair chunk of shares when it was on its way down here. These two buy orders, they're actually set at two different amounts. I know there's only £6 in them, but I didn't think they'd even get fulfilled, to be honest. But the reality is they were around about $42 a share, and there was a point at yesterday it got down to about 32. Yeah, here we are, 32.86. So nearly $10 less than what my my buy under price was that got triggered. But obviously it's recovered back to 38 here. So I think, again, this is this buy and hold strategy. Don't get off the roller coaster or you'll get hurt. So yeah, I think overall, hopefully this stock will recover. Obviously it's significantly down, £370. I'm sure there are lots of people that have probably got worse portfolios. I know Let's Talk Stocks, another YouTuber, he's heavily invested with Neo, and I know he did buy some when it was in the peak, when it was around about $60 up here. So I'm sure his probably looks even less prettier, if that's even a word, than mine. But hopefully that gives you a kind of a nice overview of how my portfolio is doing. Be interesting to see if anybody want to put in the comments below if your portfolio is still in the green after this week, if you've got a pie, or indeed if you've got one or two stocks that have done particularly well that are perhaps holding your portfolio together. I mean, benefit of hindsight is a wonderful thing. I wish, if you see here, I wish I'd have chucked loads of money into American Express. I am up 17% with them, but that's the nature of this. I'm not going to have stuck all my money into American Express. Even Neo, you think it's £1,500. It's only making up about 40% of the portfolio in its own right, really. And bear in mind, I do have other money invested with Vanguard in the S&P 500 and emerging markets as well. So as an overall, it's quite a small percentage. So that's a quick overview. of everything. And you know, at the end of the day, the stock market, as I described at the beginning, is like a roller coaster. If you get off halfway round, you will get hurt. So I hope that's been a really useful insight. I'm sure there's lots of other YouTubers that have done sort of reviews this week and will give similar sort of advice, or I hope they will anyway, because that's a generalisation from the community. But as I say, if you would hit the like button, subscribe to the channel, that will do a world of good in helping this video get out to other people. If you'd like your free shares up to £100, please do use the link in the description below. And until that, I shall see you next time.